Hello traders, today is the 27th of April 2013 and the time in London is 9:49 a.m. in New York 4:49 a.m. Happy Saturday to you all. The title of this video is Swing Trade Video 1. In this video we discuss various swing trading strategy, tactics, techniques that we can use. The thing that we need to understand when we want to swing trade or when we want to become a successful swing trader. Very, very important. Before we continue, I would like to say to traders that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW SYS008 traders. Let's get started. Alright. Originally speaking, talking about swing trading, traders that were trading commodity, coffee, cotton, alright. The price of the commodity will have a peak level, the maximum price level, and also we have a minimum price level. So the price was oscillating between two levels. So for instance, if you trade rice or you trade gold, you may see sometime this commodity will have a peak level and also a low level. So the price is confined between two levels. So you will see the price going ups and down between two levels. The swing trading originally was from commodity trading. So if you want to swing trade, you want to understand first what you are doing, because talking about swing, you are swinging down, you are swinging up, and the price oscillating. This is the definition of swing trading. But there are more to swing trading, all right, which we're going to discuss in this video. Looking at this euro-pound currency pair, we are on a monthly chart. We can see that the euro-pound is consolidating between this olive horizontal line. Okay, I can tell you the level around 9,129, and also the lowest point of the consolidation roughly is at 8,363. So traders, the strategy for swing trading, trader will look for opportunity to sell at the top of the consolidation zone, and they will look for opportunity to buy at the base of the consolidation level. All right, very, very important. But it does not mean that the price will definitely turn around at the top or the price will definitely turn around at the base. One will wait for a signal and select a low risk entry point. So the first thing that we want to understand when we want to swing trade, the pattern, the typical swing trading pattern is the horizontal pattern or the balanced market pattern, which means low volatility period, because during the low volatility period, the price does not go anywhere. The price is confined. The Bollinger Band will be squeezed and the price will be oscillating between two levels. But traders need to be very careful, because when a price is consolidating or oscillating, as I explained to traders before, the price is acknowledging a key level, or the market is acknowledging a very important economy news that is about to be released. All right, that's the second point. All right, very, very important. And also the price is acknowledging a high volume, because if there is a congestion of buyers and sellers in the same zone, you will see that the price will be oscillating. It's a high volume session. All right, so one group is busy selling at this level, another group is busy buying at this level. So the price is confined between these two levels. You will see that when the price is acknowledging a very important level, either on the chart or talking about fundamental analysis, the price is at a small median line, or the price is at a fair value, or the price is at a very discounted price. So traders, technical traders, fundamental traders, all market participants, one group is selling, another group is buying. So the price is consolidating. All right, we need to understand the meaning of the consolidation, why the market consolidates sometimes. So you will see sometime one day, all right, the market move up, trader make a lot of money. The next day they apply the same strategy and they try to make money and they give everything back. Why? Because the previous day the market was trending. The next day, the market was slowing down. So traders that were using the trending methods and failed to acknowledge the market patterns, all right, now they are applying a trending strategy when the market was consolidating. That's why we say to traders it's so important to draw the channels. Very, very important. All right, so either the market is acknowledging a key level or a value zone, or the market is waiting for a very important news. There's also when the volatility is low, the market is likely to consolidate. The price will be oscillating between two levels. So the best strategy during this time is for swing trading. One will be looking for opportunity to sell at the top of the base and look for opportunity to buy at the low of the base. There are more to this. As a swing trader, what do you need to do? All right. So this is what we call the setup. As a swing trader, there are things you cannot, violate. As some traders say, George always say, blame traders. They'll say, oh, do not, don't cut corners and all these things. I understand. But what I'm saying to traders is this. Yeah? This is the setup. Okay. So you see the price consolidating. All right. You are TSTWSY use your A trader. This is what we call the setup. Okay. Now you will not enter the trade on the setup time frame. All right. You will wait for a signal on the signal time frame. When a signal is given, all right, you do not have to take the signal. This is one thing traders should understand. Why? Because if the risk is high, you will not take it. Though the signal is given, suppose you are stopping at a red signal, okay? You are driving, all right? So you have an amber light and then you have a green light. But old lady was passing the road. Will you go and crash the old lady? You will not go. Though the signal was given, the environment were not right, you will not start speeding because the signal is given. The same thing we do in trading. So when you see the signal, you do not have to take it. When you see the green light at the traffic light, you do not have to go. If you see a child crossing or a blind person crossing the road, you will not go. Though you have a green signal, you will not go. The same thing we do in trading. If the risk is too high, or the time of the day, talking about the gap period, or there are some economy news that are due that you are not sure about, that may change the dynamics of the market, you may not take it. The setup was there, good. The signal was given, good, but the environment was not right. This is what we talk about, the low risk entry point. Recently, we have given to trader the TST key 02. This is additional trading tool for TSTWSY S008 traders. Now, so we see the setup like this. Now I'm on a monthly chart. I see that the price was consolidating. Another thing that we encourage traders to do is to be curious. All right. So you see the setup on the setup time frame. Don't close your eyes. Don't just forget everything else. Be curious. What do I mean? Go to the higher time frame. See the bigger picture. The price may be declining on another time frame and consolidating another time frame. The price may be declining on another time frame and maybe going up on another time frame. So you see, for instance, on the 4-hour chart, the price is in a declining channel, but on the hourly chart, the price is in a rising channel. Well, the higher time frame commands the lower time frame. So you want to be curious. So you will go to the quarterly chart, which is higher than the monthly chart. You will go to the yearly chart. If you have even a 3-year chart, you will do that. So what I'm saying is this: the setup time frame, attention to the market pattern. The typical market pattern for swing trading is consolidation. Good. Now, why the price consolidating? Is it acknowledging a key level? Is it because the market is waiting for the earning news regarding the stock that you are trading? Is it because the earning season was approaching? This month of April was a busy period for earning season. Now, or is it because of a high volume? Is it because there's a value there? Is the price is at a critical price level? These are things you need to know why the price was consolidating. Is it because there are some litigation pending on the company, or is it the company is about to change their directors? These are the few things you want to pay attention to. Check the economy news, why the price is consolidating. The next thing, be curious, check the higher time frames. Frames in plural, not one. So I was on a monthly chart, all right? So I show you now for the Euro USD. I will go, okay, this is the monthly chart, see it's consolidating. Now you see it's near the base, it's going back above it. Now it's sitting here. Some traders, after watching this video, they will go and buy. It's up to them. So be curious, go to the quarterly chart, see where is the price, what's going on. Is something else there? Draw the trend lines on that higher time frame. Know your key levels, what other traders are looking at. The price will not hide it. All right, so you see now how the price touch it here, exactly on the dot here. All right, so you will go to the higher time frame and check what's going on, so you do not buy in a resistance zone. All right, at least you want to buy at a support level at a low risk point. So you do your verification on a higher time frame. Now what do? You wait for signal on the signal time frame. So the signal is given, boom. You say, George, this is your signal, okay? All right. You check it carefully. So now, do you take the signal? You do not have to. You may decide not to take it. You may decide to take it. But if you're about to enter the trade, you will enter the trade not on the signal time frame, on the entry time frame, because the reason is that you don't want to enter the trade and see the price working against you straight away. That's why it's so important to go to the lower time frame. Some traders will go even to the 1 minute chart, even 10-second time frame, before they enter a swing trade. It's amazing because they don't want to risk too much. Because if you are swing trading, you're going to risk more money. But the best trading instrument, a lot of swing traders are option traders. So they will buy a call option if they want to buy, and they will buy a put option if they want to sell, because they don't want to be taken out, their stop loss being broken. But it's the same thing, all right? It's the same thing with in every case, you will, okay, control the risk. So we talk about the consolidation, which is one pattern about, okay, swing trading. The next pattern that I want to show traders, I will bring another financial instrument. In this case, we will look at, though I'm using currency pair here because I trade forex more than stock. This, what we are discussing here, is valid for crude oil, for gold, for stock, for any financial instrument. I'm going to go now to the daily chart of the USD yen. Okay. So we're going to start drawing lines, okay? Because this currency pair has become very, very important market indicator recently due to the policy in Japan, all right? So we talk about the typical swing trading pattern is the horizontal channel, okay? So there's one here on these daily charts. But you don't want to forget the guidelines that we follow when we are swing trading. So we are looking first for a setup on a setup time frame. The next thing, we want to be curious. That's the next thing we want to do. All right. Now we will wait for the signal. We do not have to take the signal straight away. If we are happy about the signal, we must not enter the signal on the signal time frame. Now we will go to the entry time frame. If the signal fell, we will come out. It's just very simple. Good. So, but we want to work with the market pattern because this market pattern remains intact, does not change. Either the price is horizontal, or is rising, or is declining. It's something that is stable. We can work with that because it's a messy market. We want at least one thing that is remaining intact in this messy market, and these are the market pattern, and we want to work with that. At least with that information, we can make excellent decisions. The next thing I want to say to traders is not because you see horizontal channel that you will definitely sell here. The price can break above this level, find a support, and go up. It's not because the price at the base that the price will definitely turn around. The price can fail to find a support here, break below, retest, and continue the movement to the downside. If you follow the steps, all right, which means you wait for a signal. The signal is given to you on the signal time frame. Don't jump on it. Don't force it. Don't be courageous. Don't be bold. A lot of traders that are very bold, courageous, lose more than traders that are, okay, more patient. This is what I noticed myself before. I was very, very aggressive and bold trader. It doesn't work. You want to show that, yes, I am right, I can do this, but the market will just punish you. That's not the right way forward. You want to be more calm. You want to be more relaxed. and you will make better decisions. This is now covered. We will not come back to that again. The next pattern, the horizontal chart pattern, the rising chart pattern. This is it. You see the channels. So I need 2 points, this point and this point. Okay, let's zoom into it so we can look at it clearly. This point and this point allow me to draw it. This is what I say to traders all the time, and it's nothing special about it. And for many years, traders use the same thing. And now, it's down to the trader to make that decision to use it or not to use it. In a rising channel, what do we expect the price to do? We are expecting the price to display higher lows and higher highs. Okay, good. If the price is in a rising channel, but the price failed to display a new higher high, it is telling us that the bullish momentum is diminishing. It does not mean that the trend cannot continue, but we will acknowledge that very, very important information given to us by the price itself. So you may decide to stay out though the price is in a rising channel. But anytime you are selling in a rising channel, you know this is a contra trend. It's a risky trade. All right? The best strategy in a rising channel is to allow the price to pull back near the base of the channel, somewhere here, and to give you a buy signal here. So this is again a setup. So I'm now on a daily chart for the Euro USD. Okay, you can see I was on a monthly chart. So I'm on a daily chart like this, and I see this USD yen pulling back to this level here. Okay, this is my setup. So what's the next step? Following the guidelines of swing trading, ladies and gentlemen. Let's continue with this carefully, all right? Because I want traders to understand. We will not buy like this, like old-fashioned traders. Though sometimes traders do that and you wait. But we want to control the risk or minimize the risk. For that reason, we will try now. Next step is to be curious. So we are on a week, we are on a monthly, we are on a daily chart here. I'll go to the weekly chart and see where are we. My spot is still here. Okay, it's not too bad. Okay, price has been going up for some time. I may use the projection of my horizontal channel. It went more than 3 times. Okay, it's very, very bullish. And it's pulling back here. Well, I don't want to be the last person buying. I want to be careful. Okay, nothing should stop me to go to the monthly chart. Yeah, and see, is the price at a resistance level? Is he at a resistance level? Is he at a resistance level? You see my spotlight is still here, the green one. In fact, the price was near resistance level, but it pulled back a bit. We need to be very careful now. All right? So you want to know, because you want to buy at the support level. You may decide to allow it to go above the horizontal line before you buy. So these are the few things you may decide to do. So you want to be curious. Is your chart curious? You see, this is a quarterly chart. My green line is here, but you just need to be curious here. You see, there's a support here. So on the quarterly chart, it's a pullback near a support zone. It's not too bad, okay? So we are watching it. You understand? Be curious. If your broker allows you to see the yearly chart, all right, great. So you do your verification. So the pattern is horizontal, it's a rising channel on the daily chart. You do your verification to know that there is no conflict between the daily chart and the higher time frames. You want to know that you want to buy at the support level. So, okay, great. You go back again to your daily chart. Now what do you need to do? You are happy with your setup. You do your verification. You wait for signal. You know, many times traders find it very difficult to wait. Wait for the signal. The signal is given, do not enter. You do not have to take it. Remember what I said to you, a blind man crossing the road. When a green light is given, you do not have to rush, okay? Or you are driving, all right? Priority to the right, it's you who should go to the right, but another car is there. You do not force it because it's your priority to go to the right. But we see all the time when they are using trading system or they are trading, they say, this is the signal, I must take it. You do not have to, okay? You do not have to. If the road is not clear, if the environment is not right, if some crazy economy, no farm payday data is about to be released, all right? Well, a lot of professionals will stay home instead. But You want to know what is taking place, so you do not just use your technical alone. This is another sub point we're going to highlight in the second part of this video. And so trader may understand what is taking place in this messy market. The most important thing for a swing trader, which we'll discuss in another part of this video, is about responsibility. Understanding what you are doing, so you want to follow your guidelines carefully, the setup, verification, signal. You do not have to take the signal. Wait for, okay, a low risk entry point. So you switch to the lower time frame, you are watching it. Suppose you have a great setup, okay? The signal also was great, all right? And now you find a low risk entry point, you enter the trade. Now you will decide how much, okay, you want to risk. So if you buy a call option, that's your risk, your premium, that's what you are risking. If you are spread betting or using binary betting, the money you put down, that's your risk. You want to decide how much are you willing to risk. The key point I want to highlight here is the 5% money management rules. If you open 10 trades, those 10 trades must not exceed the 5% of your trading account. If one day you want to trade for Goldman Sachs, the most important thing that they will put into your head is about risk control, hedging. Anybody can trade, but hedging and risk control is the most important thing for all traders, because you don't want to give $50 or $500 or $1,000 to get only, okay, $5 back, okay? So I wait for my signal. Yes, the signal is given. Yes, okay, I find a low risk entry point. I enter the trade. All right, great. The trade is working perfectly for me. The next step, what I can do, I can move my stop loss to break even. So if I'm risking myself because I like spread betting, if I'm risking, for instance, for my trade, 60 pips, all right, for that trade, all right. If the price move, for instance, 45 pips, I may move my stop loss, okay, 45 pips also. All right, so I'm risking, instead of 60 pips, I'm risking now 15 pips. All right, so these are the kind of things you can do. Some trader will move their stop loss straight away to break even. I may decide not to move my stop loss at all, depending on my risk tolerance, what type of trader I am, my trading style, the time of the day, the season of the year, what is taking place in the market, the volatility. I may decide what type of financial instrument I'm trading. I cannot use a 60 pip stop loss for Apple stock or for Google stock. They will wipe you out very fast. So you want to check the volatility, the average true run of the financial instrument that you are trading. These are the few things you need to slowly but gradually, you will, okay, master them. So in a rising channel, the strategy is to allow the price to pull back near the base. This is the setup. We do our verification, we wait for the signal, and then we select a low risk entry point using the TSTWSY L008 patiently. All right. Okay. So this is for the rising channel. But now, as I explained to you, for a rising channel, I need to mention this, very important. In a rising channel, we are expecting the price to display higher lows and higher highs until the price fails to display a new high high. Now, there's something here I need to show to traders, which is very important, because we see some traders very excited, all this blah, 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 blah. Look, there are a lot of traders that are very, very experienced, more intelligent, but they are losing money. But it can happen like this, all right? So there's no point to be blah, 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 all right? Now, so you see here, the price going like this, you see. So we see here it's stuck here now, okay? All right, I'm going to color it now. I'm speaking like this, no, because of what is happening now in the market, but there's the things that we have seen in the past, okay? So do not think that I'm talking about one trader or another trader, but this is something we have seen in the past, a lot of things, all right? So you see here, it was going now, going now, going now. Now it starts, you see, stuck here, you see. Couldn't display a new high. You see the orange line here. You see, now, as he was pulling here, you see the tall candle here. You have to also pay attention to the candle. It was quite bearish, this candle, this red one here. It required a lot of caution. In fact, the price was failing to display new high and pull back with this candle like this. You don't want to chase it too much. You want to go steadily, because the price was warning us that, okay, the bullish momentum is weakening. It's weakening. It's weakening. All right? So this pullback did not happen at the best place because there was a warning that the bullish momentum was weakening before the pullback. Well, we will acknowledge it. You can see that though it went perfectly, it went above it, some traders challenged it again and sold it back down. This time, even below, okay, the channel. So there are some bears here selling before the price went back in again. So you're going to ask me, George, what do we need to do? Well, you can see here again, the price touched the top of the channel, though it's in a rising channel. Traders sold it. Why? Because you see, this is what we are talking about, should display a higher high. It fell here, there was a high here, couldn't go above the high. And they bring it back here. But again, the same thing I'm saying to traders again, here you see it's coming near the low of the rising channel. It's a tricky one again because the price has displayed a lower high before pulling back. We cannot just buy anyhow. In fact, what I was saying to traders on Google Plus, okay, which we can talk about here, is that I do not want to buy the USD yen, okay? I do not want to buy it. Traders can buy it, but I do not want to buy it. I have my reason to do it. It does not mean that it cannot go up. It can go up, okay? But I want to look for opportunity to sell, all right? So what I would prefer, I was telling traders, which we can talk about now, is to the USD yen to go up a bit, okay? That's my expectation. Does not have to do that. That's my expectation. If it happens, that's great. I'll be watching it, okay? So it's on my watch list, okay? I was telling traders on Google Plus that I would prefer the USD yen. This is the level here, the black line here, to go to the zone of 10022. All right, if you are following us on Google Plus, okay. So that's the black line here to go to 10022. Okay, so from here, in fact, I was thinking that we will do it last Friday, but it didn't because of this weakness. Traders took advantage of it on the edge of this channel. So we will see next week whether they will allow it to come to 10022. But there is a weakness here. There are sellers here, okay? There are sellers here, okay? I want to be seller also, but I don't want to sell it where it is now. That's the only problem I have. All right, I'm also a seller. I want to sell, but I would prefer it because why? Because the price, the key level, the psychological price level for the USD yen is 10000. That's what the Bank of Japan wants. That's what the hedge fund has done. They brought it to 10000. Now they are taking profit. Well, but then you see the price. First time it went to that zone, it pulled back. Okay, and try to go back again to the same zone. Some traders are selling it. I will prefer the price to try to go above it now and see whether there are still sellers above the level of 100. I will prefer that. If it come back above the 100 and we see a lot of sellers here, that will give us more confidence that we can sell it. You remember what I said to you, that do not sell before the smart money. Sell together with the smart money. The smart money will sell always at the highest price. Ordinary trader will start selling first, and the smart money will say, yes, we know we should sell, but we want to sell at the best place. So for the horizontal channel, we want to understand the language of the price. High lows, high high. A pullback to the base of the rising channel does not guarantee that the price will go back up. And we want to understand what the price has communicated to us before we are jumping to the trade. As you can see here, the price was touching the base of the rising channel. But you see, if you trade like old-fashioned traders here, it went down unless you have a proper risk control. You see now? So we talk about the horizontal channel. We talk about the rising channel. The next channel, ladies and gentlemen, is the declining channel. I will remove, my line on this chart. And we will go now to the weekly chart of this currency pair. So we were talking about the horizontal channel, we talked about the rising channel, now the last channel. You know, I can teach somebody to swing trade in one day like this, but there are more to swing trading, okay, which we will discuss in the next part of the video, okay, talking about swing trading, okay. So here, I need 2 points to draw my the top channel. So this the top line is a point. I'm using this point and this point. Now I can use this point and this point, but because this bearish trend is kaput now, so I'm choosing the best option. So this point and this point, okay. What I'm going to do next, I will choose 1 point below and make it parallel. In fact, so you can see more line, I will choose, okay, 1 point here, like this, roughly, okay. Or I feel free to say, oh, George, that's not the right way, okay. So here we see that the price was in a declining channel. How do we handle that? If the price is in a declining channel, here we are on the weekly chart. This is the setup, okay. What's the next step for swing trading? Verification. We go to a higher time frame, monthly chart, quarterly chart, yearly chart to do our verification. Great. We are satisfied with the setup. What do we need to do? We wait for the signal. Great. Signal time frame must be different from the setup time frame. All right. Talking about top-down trading method, we want to do things properly. The signal is given. We do not have to take the signal, and you do not enter the trade on a signal time frame. If you are entering the trade on a signal time frame, the risk is higher. All right. We will select a low risk entry point on the entry time frame to enter the trade. If the signal failed, we will come out. All right. Now, for the rising channel, our best place, talking about a low risk entry point, because we want to swing trade, all right, we want to trade on the edge. What do I mean? You want to swing trade, the price going down, you want to position yourself around this bearish, okay, the top of this bearish channel. That's the best low risk entry point. So you see here, we have my line ready, and we see it was coming here, all right. This is our setup. As it comes here, we are watching it. Okay. As soon as the price near this level, we'll switch to the signal time frame. All right. If the signal is fired, we will look for a low risk entry point and enter the trade. But if suppose we were selling here, which is near the median line of our bearish channel, it's a bit risky. The best place when we are swing trading like this, the best place is the top of the declining channel. Now again, as we have said for the rising channel, when the price is truly bearish, it's not because it's in a declining channel. This is the problem that some traders face also when they are using MACD. MACD is below a signal line. Traders think that it's definitely bearish. But what the price itself is showing you, MACD may be below a signal line, but the price suddenly has displayed a fair higher low. Is it still bearish because are you trading MACD or are you trading the price? The same thing, if the price is in a declining channel, generally speaking, it's bearish. But we want to pay attention to the price itself. Okay? So the price in a declining channel, it must display lower lows, lower high. If it fails to display a new lower low, it's giving us a warning that the bearish momentum is weakening or is slowing down. So we will be careful. All right? So here, there was a high, a lower high, and a third lower high at a low risk point. But before that, you want to look on your left-hand side. What has happened before? Look carefully. Yes, this is not too bad because the price went down to display a new lower low before coming back here. If, for instance, there was no new lower low, and in fact the price displayed instead a higher low, before returning to the low risk point, we will be careful. Like here, look this one here. Okay. You see here? Here the price was consolidating, though it was in a bearish channel. Suddenly the price started failing to display new lower low, telling us at this point in time, though we are still in the bearish channel, telling us that the bearish momentum is weakening. So the price is approaching the low risk entry point of the bearish channel. Here is very tricky to sell. If you are selling here, you must use a very tiny stop loss and control the risk carefully, because the price was giving us a warning that it's not working anymore. Why the price consolidating here? Probably the price was acknowledging a support level, or economy news, or volatility going low. Why the volatility is going low? So during when the volatility is high, it's because there is a lot of imbalance in the market. Okay, if there is an imbalance, we have high volatility, which means one group of dominant force, okay, one dominant force is leading the market. So the market is volatile during the trending period most of the time. All right. So it's telling us that volatility is going low, which means we have a balanced market. Usually, okay, the price may change direction after that. And here it is, it came out. See here? So you want to understand the language of the price when you are using, okay, the channels. The rising channel, you want to see high, low, high. If you understand everything that I said in this video, you can swing trade. But there are more to this, which we will discuss in the next video. I hope you have found this video useful. I will put it into use, okay, in order to make excellent swing trading decisions. I invite you to follow me in the next video where we discuss more, okay, about a swing trade. Thank you.